This week was the week of chap chap. Honestly, this week was a terrible week of just consolidation, different headlines pushing the market back and forth. Next week is going to be really easy, though, because now we have this very clear weekly low and then weekly high that we'll be looking to for a break for some clarification. Likely, we're going to continue this consolidation, though, until we get a headline that's going to break it. There's lots of speculation that we're going to see a China deal come out soon. I'm really skeptical on how that's going to turn out. But also my bearish thesis is that what we're going to see is that even after tariffs are quote unquote resolved or some deals are made, that the damage has already been done to the global economy, and we're going to get another poor GDP print. We're going to have a technical recession, not a bad recession for the economy. So we're still looking for this upside target. I'm still bullish. The standout plays this week were HIMS, which held the downtrend all day. Now, I did close some of the contracts that expire next week just because for my weeklies, when the market's like this, for weeklies, I like to avoid weekend headlines, okay, especially with the tariff talks. Tariff talks could fall apart over the weekend, right? I want to kind of control, that super short-term risk. I still want to keep the May 23rd calls open, so I left those open. Those are up 37%. But I was hoping with those weeklies to actually just squeeze out some profits into the close. And we got, a nibble. Basically, break even didn't matter, right? But it was still worth the attempt, in my opinion, to see if we could get like a push over 52 and I could scalp a quick 15% into the close. However, I'm still very, very bullish on HIMS. I would prefer us to have closed over 52.26 because that sets us up for a run to 57. But nice consolidation above, even the 4-hour EMA here. But we did a good job, staying above that 65-minute as well. So we've come back, we've tested this bullish EMA 1, 2, 3, 4 times, defended it every single time. And what we actually did here is we did a really nice reset because all throughout here we were staying in this very overbought RSI. And today with the back test of that and then a reclaim above 50, which is a major level of consolidation here, we've reset that RSI, and really all we've done is free up HIMS a lot more room to run next week. So I really like the setup here. That said, I just wanted to close some of those weekly contracts to kind of avoid some of the news headlines. The 4-hour still looks a bit iffy right here, but this can reverse. 4 hours could be a bit tricky, so it could continue to push down on the TTM and then just pull a reversal, and this can just consolidate sideways a little bit longer. So I'm not too worried about that. The daily is getting a bit overbought. Again, not too worried about that. This can trend sideways, and a really high quality name like this, in my opinion, based on my fundamentals, this is definitely a high quality name, can push much higher. So it can go for a double top minimum. If you get over the double top, this thing can honestly make a run like Palantir. That's kind of where I'm benchmarking it off of. That might sound a bit odd, but you got to remember it's an online internet company, 80% margins. This can honestly make like one of these parabolic runs and go for a double top, and maybe even push slightly over it. This is kind of what I'm looking for. Palantir is another name to kind of keep an eye on for next week if the bull rally continues. Palantir had a really nice classic retracement post earnings. And it's setting up what looks to be like a beautiful cup and handle. Look at that perfect retracement to the 618. So I have a trigger here if we go over this top. That'll be a triple top break. And that can literally send this thing to about 150 range. So that's going to be one of my top watches for next week as well. I just kind of wanted to throw that one out there because it was a little exciting. Coinbase has been a bit of a drag. Made some money here this morning, some nice padding for the swing position that I decided to hold. It's still just in this period of consolidation. Earnings was a double miss, but that was a lot, mostly from unrealized losses on their balance sheet. And meanwhile, crypto right now is rallied. So I'm seeing reports that even Ethereum was rallying as well. Honestly, I have not kept a close eye on it today. There's too many other things to watch. Yeah, so all of this like kind of consolidating at the highs looks really strong. We kind of went over the fibs earlier today for Bitcoin. And those fib levels on the break of an all-time high. So first level you're going to look for is the all-time high at 109. And then, in my opinion, you're looking for 114. If you get a solid break for 114, you're looking for the short-term top to be 134. That's your 618 extension for the fifth wave. So that would be top for this 5-wave pattern, in my opinion. Let's get this big daily chart here. For this wave pattern that's developing right here. So that's what I'm looking for. I'd say most likely outcome is you get to 114 and then you do a period, you do kind of a chop back to the downside, and then maybe you even come back and test the 103 again, or maybe like 106 to 103 range before you either more broadly turn over, or we actually see a big super cycle into the end of the year, and it starts to play catch up with gold. So it's already disconnected from equities. In fact, I think the SPY's been chasing Bitcoin, which has been really interesting to kind of watch unfold. I say that with a grain of salt because obviously this has just been sideways. Bitcoin obviously hasn't, but some of the sudden rallies without headlines from the market, even today, intraday rallies have can perfectly coincided with Bitcoin rallies, which is really interesting in my opinion, that maybe institutional traders are still looking at Bitcoin as a measurement of liquidity, and they're seeing Bitcoin rally and they're saying that liquidity is improving, and they're actually getting more bullish on the peripherals of the traditional market, the stock market. Maybe it's a thesis. We'll see how that continues to pan out. I think that we've completely disconnected. It's what the Bitcoin maxis want, right? And I think we're going to at least double top. Could happen over the weekend, which is why I went ahead and held coin. Now it's test in hand. Made some nice padding, kind of buying the dip. I would have liked to have been a little bit quicker with buying the dip this morning, but given the fact that the earnings report, had there not been those unrealized losses, would have been actually pretty good. I think that's why everyone was kind of had the appetite to even just buy this in the pre-market, and then that's why I bought some shorter term calls looking for a rally on the day. And then the market kind of traded sideways. We created a double bottom here. Holding the double bottom, though, with the after-hour structure, in my opinion, is bullish. So long as Bitcoin's well behaved over the weekend, we should get a big spike on Monday from both MSTR and Coinbase. And Coinbase right now is more appealing to me than MSTR because the option contracts here have, literally today, I could check real quick. Literally earlier today, they had... they were the cheapest they've been all year on a historical volatility perspective. Yeah, so the current historical volatility percentile is 1%. And the current implied volatility percentile is 0%. Abraham, I'll let him speak on that more because that's actually really interesting, and I'm actually really curious what things he might want to say is. Carvana was really interesting for a short position. I almost took it today, but I want to pause on this a little bit longer. We did a nice consolidation here, and one of the things is that there's actually a really nice bullish divergence right here. Like we could see the RSI creating a double bottom while the stock's clearly in an uptrend, right? So I kind of want to see that break. Now this technically was a short trigger below here, but as you can see, we kind of faked out the trigger twice and then we ended up holding it. So let's keep an eye on this next week. I do think for Carvana, the guidance they gave, I think is batshit crazy. I don't think that they're going to meet those expectations at all. And so I am looking to short this one, especially in the next earnings. But I would like to be a little bit more patient because I would like to actually see the market roll over a bit more before I take that position. Same thing. I was eyeing TMDX. There was an interesting short report that I actually read twice today as I was trying to make up my mind on whether or not to actually set this up. But this will be another one to keep an eye on. Transmedics had Scorpion. I don't even know that's the name of the short fund. But they're a really high reputable short fund. They are an off branch of Hindenburg, who was the first company to write the short report on Carvana. They've already wrote one previously about TransMedics, but they actually followed up on this previous short report. Something they haven't done with Carvana, but they did a follow-up report where they think that this earnings was a complete scam. They actually said it was more like Chinese scams rather than American scams. That's how ballsy it was. And they're looking for this to fall apart. Either way, there's just technically, and actually we can bring this up just a little bit, there's a really nice gap to the downside that I'd like to look for, and that's kind of it for now. I don't know if it's real or not, but that's something I would really like to trade. I guess I should make some more comments about trades that we actually took this week. I will keep an eye on the chat. I see we got a good amount of people in here. Does anyone have any questions about the trades this week or about current open positions? VKTX, we're still looking for like the second quarter data. We defended a really nice breakdown this week. I did reposition a little bit. I wanted to take some of those out of the day trade account, which is more just to free up some cash because I had a large position in both accounts. I took some of that cash, sold it in the day trade account, and then loaded it up back into the Leaps and the Swing account. So I'll be looking to see if, how that trial 2 data comes out. We're still a ways away from that catalyst coming through. What this does until then doesn't really bug me. Obviously, I would prefer that, we didn't have a big breakdown. So I really like to see, us defend big dips like this. Probably the big swing trade of the week was Tesla, which printed way sooner than I anticipated. We caught the $50 million call position that was bought for June 20th. And also loaded up some Tesla calls in the 300s. Took 1/4 of those at 25%, just staying disciplined. You have profits, always be closing profits, right? So we closed 25% of that. And then today I closed some at 70 and then around like 75%. I actually fully closed the position because I was seeing some market weakness. And it ended up being a bit soon. We sold here around like 300 and Tesla ended up pushing to 307 and then did a full V shape and returned back. So we can actually keep this on the radar though, because now a further push over this is going to be an interesting run to, I believe 325 is what you're looking for next on this name. So look at that. Go ahead and set up that alert for next 324. Same thing. Close enough, rather. So we'll keep an eye out next week to see if we can catch an extension on Tesla. This really, really tough one to catch in the morning. So it's good we had that swing. This name, when traders want to trade it in the morning, they rip it. Like this thing within the first 2 minutes of the market open had already ripped 20 points. I exaggerated a lot, 10 points. Felt like 20. When you're staring at the option chains, it feels like it's moved 50 points with how much those premiums move right off the open. And then, then psychology kicks in and you don't want to buy it. It's overpriced. You want to pull back. And then a name like that, when it wants to go, it won't pull back. There's a question here about Jumia. Jumia was one that Abraham originally mentioned. The thing about this play, okay, this is going to be goofy, okay? Even I make mistakes sometimes. I've been doing this over a decade. But I will say... you know what? No, I'm not going to take full blame for this one because part of it's on TradingView, okay? When I set these Jumia swings up originally, I wanted to take a small position because the earnings data had it populated. And so when I originally looked at the chart, I was like, oh, there's a beautiful gap here that I would love to see filled. We also have earnings coming up. And it's kind of like bouncing off the bottom here. It looks really good. It actually looks like an inverse head and shoulders that actually is breaking the neckline now. So it's really, really bullish, right? So I wanted to see how that earnings report was. And then later in the day, I look and the earnings report had already happened yesterday morning, but the data hadn't been populated in TradingView. So that's my mistake. I just assumed that hadn't happened. It was going to happen the night of. Now, I did end up reading the earnings report yesterday, and we bought some shares here. So I do have a share position, even though I went ahead and closed that tiny, pretty much I only put on like, what were those options when I bought them? I think they were like 14 cents, right? It was this. I had literally like $100 in that position or something. It was negligible, right? It was just hoping on the earnings would be a big catalyst to $4. At which point, I could have turned like $100 in like 500 or something, but it was pretty negligible. So that's why I just went ahead and closed it, even though I like it. But that's because I had the shares. The shares are going to pay me on that one. I don't really want to sit in the options, the weekly options on a penny stock. No thanks. So share position's good. The thing about Jumia is they're still getting slaughtered by currencies being debased, devalued, is slaughtering their business bad. And they're losing a amount of money, and they're getting a little low on runway cash. Okay, but here's the thing. Here's why I like it still, and why it's getting a rally off the earnings, and why the market seems to like it. The core business is still growing. Orders were up over 20%. Our active consumers was up by, I believe, 15%. That's your core business. That's the only thing you care about when you're trying to grow like an Amazon, obviously, like an online retailer. Like those are the two metrics that matter the most, right? Are active customers coming back? Are they ordering more stuff? Boom, boom. You've got both of those. So with those components, you do have a path towards profitability. And hopefully over the next year, you can get some more stabilization on the currencies. Now, and the turmoil, there should come out of like this global turmoil with some stabilization. Of course, we're in Africa. It's a little bit different. I'm not completely familiar, but good enough. I'm close enough, So when we see the those currencies stabilize a little bit, that's going to be a huge boost for this company. They do have enough runway to barely reach profitability. So that'll be huge. Maybe they can also get some more funding because the core business is still growing. So someone is likely going to be willing to give them another loan if they do get low on money. So it's still leaning a bit more on, I'd say, the highly speculative side as far as, a long-term investment, even though I did make it such. Put a little bit of position on it. But as a trade, I think it's fine. I think the market should be happy with how that earnings gone, given that the core business is still growing and it has a shot. It's not going bankrupt. It has a shot to make it. It has a shot at being a pretty incredible turnaround story in what is likely to be over the next few decades the fastest growing region in the world. Probably, in the first half of the next century, India might be the fastest growing, but Africa should shortly afterwards start to catch up too, especially with AI innovation and stuff, and maybe even robotics and stuff. They should play catch up really, really fast. And they already are in many aspects, especially when it comes to population growth, right? People come, and then more people, more money, more jobs, more industries, more everything, right? And that's what we're seeing from that area of the world. Gold is interesting. I didn't touch GDX, even though it's having a nice bounce out of the hole, because I do not believe that the market's ready to turn over. So I think this might be some consolidation. I'm a little hesitant to actually set out those positions. I do want to say that the daily's also giving us a single to the downside. Now, if we can get over this previous high and we can stop, this obviously to me just looks like a wedge, right? We have lower highs and then also higher lows going in. So we have this wedge formation. If we do get a solid break out of this, then I'm willing to give this a look. And we can actually set up a trigger to review if we do break over that high. Until then, I don't really want to step into this too early. Bull, we made some money on Bull this week with a squeeze. That is way too large of a time frame to review this one. We caught some nice moves. Honestly, I have my stop triggered down here, 1424, where we've had some support been drawn off this stock. I am looking for a bigger move to the upside, although the technicals are kind of falling apart. So we've locked in some good profits here. I'm going to leave this on and see if we can get a few other boosts. Webull has been putting out a lot of announcements lately, and there should be a few more trying to juice their stock price. So we'll see. We'll see if they've got anything else in the tank. This name still has a lot of speculation and a good amount of activity. It's been hanging around a 1 R vol. It has been at times a little bit higher than that. This chart is just such a freaking mess because of that early rally after, like, I can't even see it. It's over 1. I can see that in the corner down there. So that's good. This, that's still in a playable range over 1. So we'll see if we can get, some more random pops. Probably a little bit more on the speculative end. It's not something I would say has probably a high win rate chance. It's probably something that's more like a 50-50 right now. And that's why I just have a share position. I don't have options there. But we did lock in some gains this week, and that was pretty cool. Let me see if there's any other plays, if there's any other questions. We still have cracks on. I could talk about that. We had Hood. Hood was a really good trade this week. Multiple trades off of Hood. It finally broke out of this consolidation period. So if you remember last week, actually, we kept trying Hood and it kept giving us small scrapes. And then this week we had we had a great swings, and then we had some great day trades as well. I do get a little nervous around the 55. And we have had some trouble actually holding over that level. So next week, that's what I want to see from Hood. I actually want to see it break out over this 55 and actually hold it. Maybe even a close, a full day close over that level would be a really nice confirmation of a continuation. But I really liked it. It was a good play. We finally got the breakout. We've hit on this huge major level. If next week's bullish, that's going to be kind of like HIMS where, except it's already hit the previous high. So should be a nice push further to the upside. I do want to say that I think the daily is kind of, no, this looks fine actually. Daily still looks like a very healthy structure. It's not even too overbought yet. It can definitely go a whole lot higher. So that one looks very fine. It looks just fine to me. We have the Apple shorts on. Let me check if there's any questions here. I don't see any questions. So I'll just keep running down. Abraham says TTD. I'll let him talk about that then. Because I didn't trade TTD. I don't know if you did, but I didn't. We have Apple in the swing account as our hedge. And I'm going to keep this hedge on. There's been no reason to really adjust this. 207 is the actual stop for this position. The trigger to load up some size is 193 and then kind of hunt for 186. So actually, if we do break the 193, what I'm looking to do is probably to buy some either 185s or 180s for a multi-week swing, maybe like a monthly swing, to look for a continuation of the breakdown. Apple's one of the few names that's really... it's really breaking down here pretty substantially on the daily. The RSI structure has now gotten bearish. The daily is breaking down. The weekly is about to break down further to the downside. The RSI is telling us that. And I believe the 2-day is about to roll over as well. So the 2-day was starting to give a bullish signal, but it's already starting to roll over. Apple's definitely the weakest of the big tech stocks. I know a lot of people might think it's Google. But just from behavior here, even just the way Google bounced off the lows right there, it tells me it's probably stronger than Apple even here. Apple's just been kind of dead in the water. I think it's a trash company. There's no growth. It's growing at 2% year over year. It's got nothing in the pipeline, right? What does Google have in the pipeline? Google has Waymo, which is further ahead in self-driving than Tesla. Google has YouTube, which is the #1 streaming platform in the world. Google is still a leader in quantum computing. So they're still working on that project as well. As long as a plethora of subsidiaries that I probably didn't even know about because Google probably doesn't know about all the things that it owns. What does Apple have? Apple has their phones, their unprofitable streaming service that's much smaller, and then Apple Care. And they grow at 2% year over year. And even ahead of them saying that iPhone prices could raise dramatically, there was no even rush to get a new phone before that came out. Tim Cook said that himself. Granted, he has to say that because it's actually kind of damaging to the brand. Okay, well, let me explain that real quick because I think it's a good exercise in critical thinking. Why would it be bad if Tim Cook said that they had a surge in new buys ahead of tariffs? on the last earnings? Anyone know? Because if he had said that, this would have dumped probably straight to like 180. The stock would have completely dumped. I see nothing in the chat. No one's got a clue? Okay. Because it means that you front loaded a bunch of sales. And if you had front loaded a bunch of sales and the numbers were as poor as they were, that's really bad. Now, granted, what the stock's doing here is kind of telling you that he only said that so that the stock wouldn't dump, so people didn't think there was some front running buying, but I think there was. Same thing with Carvana. Like Carvana thinks that they're going to keep getting demand they're getting, and they're trying to act like there isn't any front run buying, which is why I want to short Carvana in the next earnings because they're.
I have a question in regards to that, Josh.
Go ahead. What's up?
So, like, don't you think though these like I didn't look at the actual report itself, but don't you think these companies definitely front ran their purchasing before these tariffs? Is not necessarily.
Yeah, that's why that's exactly what happened. That's why the GDP print was so bad. So if you guys are confused about that though, because imports are a subtraction from the GDP equation, right? So that's why those GDP numbers were so bad. Now, there was still underlying consumer weakness in the GDP numbers that also played a role into that, which is why I think the next GDP print could also be bad. But the reason why the market didn't dump, even though GDP missed, and why we continue this rally is because everyone saw the import numbers and the companies buying a bunch of imports ahead of tariffs, and they thought, oh, that's subtracting from the GDP. It's just one bad print as companies are prepping for the tariff turmoil. It's not actually a sign that the economy is slowing down. And that's just because of how that equation is mathed out. And I broke all that down actually in last week's newsletter. If you go to the weekly report channel in the Discord, you can see that. However, I think that I think there was some underlying weakness there. They were sneaking in there. We'll say that there was some suspicious weakness that could become persistent. So it's still just the whisper of a potential technical recession, as in 2 quarters in a row, being negative GDP. And that doesn't mean that the economy is going to collapse or there's going to be some horrific recession, but it could still be enough to send the market kind of back down to the lows, which is kind of my minimum thesis for how this year is going to go. I think with how long these tariffs have been on, I think you're going to go lower than that, though, because I think there's been substantial damage done. Did I answer your question, Abraham? I'm going to take... It did? Okay. That was the weakest yeah ever. Did it actually answer?
Give me a second to unmute.
Okay. All right. Just making sure it actually answered your question. Can I get some ones in the chat if everyone understood that? Because it is a really important thing to understand. If you're sure like me, you should definitely know why, and you should know when the thesis breaks. Yeah. Okay. I'm seeing 1-1. So at least one person's following along. Okay. There's some more ones. All right. Awesome. Yeah, we've covered probably 6 or 7 different names and trades. Amazon was another interesting one. Amazon is going to be really interesting next week. I had the alert. We tried actually a call position out of the whole. We got actually burned out of a call position this week. I sized up pretty large, cut some at break even, and then left the other on to see if we could get a continuation. Now, the next day, we ended up getting that continuation. I believe that was on Wednesday where we got burned out of that position, and then it ended up getting the massive pump. Luckily, we caught that pump with some SPY calls in the overnight. We did that because after Powell was done talking, market was sideways, and Trump had already told us that there was going to be a big, quote unquote, exciting announcement coming up, right? So we swung the SPY calls that was like a great 60% on the next day. We took it on the open, market dumped, and then we actually played the further to the upside, right? A beautiful day on Thursday, but that was a trade that was a loser this week was Amazon. I think we're going to make some money back on this one because if there is a China deal, Amazon should be set up to be the biggest benefactor from that. So we got the alert set on the break of 194. Should send us straight to 200 in my opinion. So I'll be keeping an eye on that move. This is a big level. So, top watch for next week in my opinion. I'll answer this question here from Z. Thoughts on what's going to happen with China over the weekend and reaction on Monday? if there is a deal that's made, it's just okay. My thoughts are that no deal is going to be made, but there might be an announcement that they're making headway on a deal or something, and the market could see that positively. I don't think China's going to give, is my take. I think China has. We even saw news today about China's meeting with Sweden again. Trade with Europe has gone up like 40%. That's the huge, I don't want to get too political, guys. I only get political when absolute necessary for the objective of making money. That's the only thing that matters to me, right? I really, honestly do not care. But the big policy error from this, or execution error, seems to be you've waged war with every country at once. And so what a lot of countries are doing is making agreements with one another that exclude the U.S. So China's basically gone to Europe and said, hey, we'll give you some great deals if you give us the things that the U.S. is no longer giving us. And, Europe is basically one giant collection of value companies, right? So the only thing they can't get from Europe is tech. That's the only thing they have to get from us, right? We're the tech leaders of the world. But you can still get like a lot of the value things that you need from Europe. So trade with Europe and between Europe and China has increased substantially. They're doing some more agreements with Sweden, which is going to give them some more vital resources they need. With the other smaller Asian countries, they've gone up. So I think China is doing their best to try to off-put having to create an agreement with the U.S. to try and off-put not having to come to the table. I think that, just culturally, they are in a better position to weather the storm. People are saying, their market's going to crash and they're going to have to come to the table. I don't know if you guys have paid attention, but China's crashed like twice over the past 5 years. We stayed on lockdowns for like 3 years, and they had no major revolts. So, and people were literally starving in their homes, and there was still no major, Viva Revolution or nothing. So I think they are proven that they can weather some brutal pain and not blink. And here in the U.S., Trump already blinked. Trump saw issues in the bond market, immediately reversed policy, saved the market, right? He's put in a put, basically, for the SPY. He's already blinked. China knows this. And China also has a bunch of treasury. So if they need to put pressure on us to try and get us to blink again, they can dump treasuries. Now, they'll do it at the cost of hurting themselves horribly as well, because it's going to destabilize the yuan. But it's a card they can play, So it's still a toss-up for me. I lean towards China's not going to make a deal. I think that people who are saying that China's got to come to the table, I have not seen a good enough argument for me to think that that's actually the case. Just nothing I've read has been convincing at all, other than just people saying like, their market's going to crash. They have to. Well, I don't, their market's crashed already multiple times. It's not even in a real recovery right now. So that's the way I'm looking at that right now. And now if there is a deal, moon mission, if they actually make a China deal, maybe SPIX goes to 5,900 here. Maybe even pushes like to 6,000. And then, we'll see how that goes from there. But I don't think we're going to even get that this month, in my opinion. Cool. When it comes to the political stuff, you guys don't agree with me. That's fine. It's just like, even if you try not to have, you don't have to agree with me on my thesis, because at the end of the day, I don't believe anything politically with very strong convictions, right? I have ideas, but I'm not necessarily married to them. So we'll be flexible and kind of open-minded with what the headlines bring. And I also don't want to be, what's the most important is that you kind of stay flexible and you don't get like Don't try to sculpt an idea on the market of like, oh, this is going to happen next politically and the market's going to do this reaction. That's just a great way to lose money. So we're kind of trying to follow the technicals and ignore the politics as much as possible. Kind of follow, like my bear thesis, if you heard me, is driven by the data outcomes, right? It's not driven by as so much as the political narratives, and we'll try to not steer into the well, I feel and I thinks. We'll try to stay away from those as possible and stay in the mindset of let's stay open-minded, let's stay flexible, let's make some motherfucking money. Am I right?